Hello, welcome everyone. Welcome to the Nature Tech in Action. Thank you for being here. Um, I'm Paige. I'm the community lead at NTC. I'm really glad to see all these faces, familiar faces. Steve, Sergio, you're gonna like this one. Hi everyone, Declan. I've met you before. I see your application in the Nature Tech on conference. Hello, Jeffrey. Hello, Gustavo, Clara, Camilo. Good to have you all here. I'd love to remind everyone as much as possible to rename themselves so we can know who you are and what your organization is, if any. That helps us connect in the best way during the Q&A and during the breakout sessions. And yes, the way this is going to go is I'm going to do a very short introduction to the subject, to tropical forest protection as a new asset class. Um, and we're going to let kind of Gunther and David take it away, after which about minute 30 or 35 we'll go into the Q&A. So you can start putting them in the chat as the session goes along. And or you can ask them live, raise your hand when the Q&A opens. For the moment, I have muted you all until the Q&A section. And then if we have time at the end of the session, and we're going to try to make time, we'll go into brief breakout rooms for anyone that does want to connect in person, or live, I mean. And there we go. So you can be in a room with potentially Gunther or David and ask more questions one-on-one, or just connect as members of the Nature Tech ecosystem. So welcome again to today's webinar. Um, it's again really great to see all your faces over and over again. For those joining for the first time, I'm Paige. I lead community efforts at the Nature Tech Collective. We're a global community of organizations that are dedicated to accelerating a nature positive transition. Our members are people who are developing different nature tech. So they're either measuring nature, restoring nature, or financing nature or helping finance nature. Um, and today we're exploring how we can rewire capital flows to support regeneration. We're joined by David Ontaneda and Gunthar Hartwig from BioFia, the Biodiversity Finance Innovation Alliance. It's a global network dedicated to designing investment opportunities in nature while empowering those who protect it. David and Gunther are presenting a reimagining of conservation finance. The reality is that very little of what's needed to halt deforestation actually reaches forest protectors on the ground, and ideas need to be put forward about that. So we're going to hear one today, a nascent but very interesting project that is hoping to gather also feedback here. So please do listen deeply and give your thoughts at the end of this. And I'm gonna kind of stop there and say that without further ado, David and Gunther, thanks so much for being here. I'm really looking forward to this presentation. I've heard so much about it in little bribes, and now I'm gonna get the full presentation myself. So maybe Gunther, can you give us what is BioFia? Where did it come
Yeah,
from?
thank you so much, Paige. And it's really nice to be here to be able to come with my colleague David to talk to this group. I know a lot of you, also don't know a lot of you, but I've been involved with the Nature Tech Collective stuff for quite a while. Always love the discussions, the feedback, right, and the insights that come from these gatherings. So very excited to finally get the chance to actually present some stuff that I've been working on back to this group, and hear your thoughts and reactions, right? So just a quick overview. Yes, BioFia is a group that's been coming together over the last months, year, founded with the idea of like trying to address this need of how we finance conservation projects, right? I think it's pretty interesting for this group because other people have been thinking about some of these things as well. So really excited to hear your feedback, like I said before. But we've been trying to gather sort of a group of folks from a wide variety of backgrounds to help feed into this. And as I point out here, I'll just run through this very quickly. There's David, who's the real mastermind behind a lot of this, right? As well as a few of the other folks that I've worked with, and you may have heard of me talking about down here in Ecuador, right? The Maki Pacuna Foundation, founded by Rebecca Justicia, who's an expert in conservation, and then myself and our other colleague, Weatherby, who is an expert in JS. We've sort of come together as the core team, but also working with a wide variety of advisors, collaborators to help think through this project. People who are experts in finance, ethics. Obviously, we're clearly, one of the things that's big here is trying to talk and engage with communities, right, that might be impacted most directly by some of these efforts, and then other sorts of thought partners who can come in and potentially also help with funding and things like that. So it's been a very cool to see this group come together. We've got a lot of different diverse voices, but obviously really want to gather more together as we look at solving and trying to put forth solutions to some of the big problems that I'm sure many of you out there face as well. So that's sort of a general overview of what the team is, right? And what we've been, think a little bit of what we've been thinking about and we're trying to. But let's dig into some of the more meat here, right? And with that, I want to actually hand it over to David. With a quick intro for him, he has been working in this area for decades. I mean, how long would you say? Your entire life, David, right? His family is one of the founders of the Maki Pacuna, is the founders of the Maki Pacuna Foundation. And they're thinking about this a lot, very much from the ground up, right? The thing about this is that it's a real bioreserve with real land, doing real work to protect real forests. So I think one of the interesting things about this project, instead of thinking of solutions coming from the top down, it's very much coming from people who are already really attuned and thinking about the land and the areas around it. So with that, actually, David, why don't I pass it over to you? And if you want to do any more intro on yourself and talk about the framing, please do so.
Thanks, Gunther, and hello, everybody. Thank you for having us here. I won't go into too much depth of myself. I'll just say, yes, this has been something that my family has been working on for decades, and really exploring the challenge of philanthropy, typical conservation work. And with that, I'll go into kind of the origin of this project and the problem that has birthed this concept, and that's that philanthropy, grants, donations, they don't, and even the carbon markets, they don't actually allow for primary forest protection. And I'll go into a story that we lived that gives this that shows the reality of this. So 2017, our reserve, it's a cloud forest reserve in Ecuador, home of the Andean bear, 80% primary forest, was covered in mining concessions. No consultation, the government sold all these concessions, and when we went to fight against this, we spoke with the Minister of Environment, and he told us two things. He said, one, I respond to the Minister of Mines and Resources. Two, unless you can make conservation pay the same or more than mining, then there's no hope for conservation. There's no hope for these forests. And this was a environmental minister that actually cared and wanted to do some good, but basically was just saying, the economics don't allow for it. And so that led us to searching for ways to value nature, searching for ways to create a system where the protection of nature is actually investable and tradable, and where it has a core kind of fundamental value. And so that's where we started working. And with that, I guess just running back all of the potential solutions that we've engaged with, that we do engage with, really. Yeah, this is the work of a conservation organization. We depend on philanthropy, but there's problems with that. It creates dependency, favors large institutions, and it's hard to access. And then government funding, it's too slow. It doesn't access the people on the ground. There's real challenges with that. Ecotourism has been our lifeline for many years, decades, and we've seen that it's so susceptible to geopolitical stability. that it's not fully dependable. So we need to diversify in a sense. And then when you think about indigenous communities, sometimes they don't want to engage with the outside world in that sense. And then carbon markets, the real challenge with carbon markets is this concept of additionality. It creates this perverse incentive that allows for a forestry company to deforest primary forest, create a monoculture plantation, sell credits on that, and that is often easier than a private reserve or a forest community that has primary untouched forest that has had successful protection for decades. And it often becomes this kind of fundamental challenge of entering the carbon market. And additionally, you have this notion that carbon is non-unique. And so then you have companies, credit buyers that buy carbon credits, and they're fully detached from the place, from the forest and the actual protectors on the ground. And then you have the biodiversity credit market, and this is, we were very hopeful about this. We started engaging with this a few years ago when it really started to emerge, and there's challenges with that too. It's early stage. The market doesn't really exist. It's very, very challenging. You really depend on these corporate relationships to have any sales. And then it's capital intensive because you have this very robust monitoring required to be able to offer value in that. And it's still voluntary by nature. It's very disconnected from offsets and for a reason. And so it's not structurally sustainable in that sense. So what we've come up with is a system where we're creating a tradable digital asset backed by standing tropical forests. And what does that mean? So we believe that nature is the store of value, that irreplaceable primary forests are the basis of an economy. And so what is the solution? It's the standing forest token, SFT, and that's a digital asset representing 1 verified hectare of intact primary forest. That digital asset is minted to the forest protector, and that's crucial here. It's not minted by us as the creators of this project. It's a system by which the forest protectors verify their hectare of standing forest and receive a token, receive a digital asset. And then where does the value come from? It's a fixed supply to start. There's 1 billion SFTs that will ever exist, but the reality, the actual supply is matched to physical, biophysical realities of how much forest is actually left. So there's less than 1 billion hectares of primary tropical forest, and that amount will be minted as the forest protectors verify, onboard and verify into the system. And so it's important that it's tradable, it's stakeable in the sense that, and I'll explain a little bit more later, but we're creating a system by which the owners of this token are able to directly connect and relate to hectares of forest in the world, and they'll be able to create this personal connection with the forest protector, and I'll explain why that's important. But crucially, it's not a donation, it's an investment. You're not buying the land, you're buying an asset that represents the protection of that land, and it's not a carbon offset. And interestingly enough, we're still creating a system that integrates and is interoperable with the carbon market, but it's not the fundamental value of it. We're not ignoring the fact that the carbon market exists, and we'll work with existing protocols and credit developers, but it's not dependent on the carbon market. So if the carbon market takes a downturn, it doesn't affect it. If it takes an upturn, even better. It works still, and it'll just increase the value. And then, so yeah, let me just keep
Perhaps you can,
going.
yes,
Yeah.
what are those SFTs and those AVTs?
So how does this system work? What is it? What's the basis of it? We've created a concept that's a dual token system. So on one hand, you have the standing forest token, the SFT. This is the one that represents the historical protection of a hectare of primary tropical forest by a forest protector. It's fungible, which means it's easily tradable. It's one is the same as any other. Once it enters into the market, you can actually buy and trade an SFT, and you're not tied to that forest in this SFT. And um, however, it still comes from a specific hectare of forest. And then in the secondary market, as each SFT is traded, a royalty is captured, and that royalty flows back to the original forest protector. So here are the two initial revenue streams for the forest protector. They can sell their initial SFT, and then they'll receive royalties in the secondary market. And higher biodiversity forests can earn more royalties, kind of representing the real value of high biodiversity forests. And then the annual verification token. This is where we start to connect to the credit market. So this is non-fungible, meaning it's unique to each hectare forest, unique to each forest protector, and this is location specific. It's you think of it as a bundle of all of the benefits that hectare forest provides. So it provides X number of carbon credits, X number of biodiversity credits, and it can even include community, water, whatever other credit mechanisms exist there. And then these are issued annually based on measured performance. So similar to the credit mark, this is where we integrate to it. And this is the backbone of the SFT, because the forest protector only receives royalties, only is engaged in this system as long as they are producing annual verification tokens. That's their key to stay in the system, and that's what offers integrity into the whole system. And then how are those? Sorry, go ahead.
Maybe you're just about to answer it, but I'm super curious as to how you monitor this performance.
Yeah, so there's two layers of monitoring and verification. So there's the kind of top level satellite imaging that can be done without the forest protector's involvement, but then there's on the ground monitoring, and this is where we're exploring different community-led DMRV techniques and methodologies. We're looking at how biodiversity credits are measured, so bioacoustics, on the ground, ground truthing and ground uh, surveys, etc. And crucially, they're all recorded on chain, which means that all of this is blockchain based. But really, what we're trying to do is create a high integrity, high trust system that can offer the buyers of these credits that confidence that what they're purchasing is real, and not only that they can actually have this direct link to the forest protector, to the forest, and visually connect to that protection that they're supporting or investing in.
I'm sorry, I'd muted myself. Yes, we're going into the participants of that system, right?
Yes. So, who are the stakeholders in this? And on one hand, crucially, you have the forest protectors. The forest protectors essentially create the supply in this market. They are the ones that add tokens into the system because they're the ones that generate the tokens. So what do they get? They get access to global capital without having to go into debt, without having to sell their land. this initial access to capital allows them to pay for that capital intensive forest monitoring. So what I mentioned before about the challenges to biodiversity credits, we're creating a system that allows them and facilitates that initial liquidity to be able to enter into that deep monitoring of their forest, and there's recurring income. So the idea is that they will receive perpetual income both from royalties and from the issuance and sale of their AVTs. So allowing them to enter into these difficult to enter markets, and then giving them a perpetual incentive to create these credits by having the royalty system as kind of the backbone of revenue generation, as well as rewarding higher biodiversity forests, because I think we in this group know better than most why that's important. But then you have the investors, and I'll divide these into two categories. You have the money-driven investors who have very little interest in the environment, in nature, forests, and then you have the investors who are environmentally minded, impact minded, or even corporate ESG groups who are interested in credits. And so the kind of traditional, let's call them investor, they get access to appreciating forest-backed assets. So the idea is there's scarcity embedded within the concept because there's a limited amount of forest left. And as these tokens are bought by the environmentally minded investors, they again take supply out of the market. Hopefully that either stabilizes or increases, appreciates the price of the tokens. And so why would the environmentally minded investors buy and hold their tokens? So we've created this concept of staking their tokens. So they can buy their SFT, stake it to a specific forest location that allows them access to purchase those AVTs from that specific forest. And that's what creates this personal connection between the buyer who is now signaling their support for this forest and purchasing the annual verification tokens, and really reducing the supply in the market. And that helps the other side of the I guess this economic system, this financial system of traditional investors buying and selling for their economic benefit. And we need that because then that creates royalty revenue for the forest protector. And this offers better storytelling, right? There's a deeper connection to place for the buyers of these AVTs, and that's crucial, especially for corporate ESG groups. You have this need for storytelling, and annual reports. You want to say, I've supported this forest, this project, this forest protector. And so that's really one of the core benefits of the corporate buyers. And then maybe very relevant to the group in this call is the verifiers. The verifier group, they would be a independent third-party companies, service providers who are offered verification tasks. And so the idea is they can accept the verification task, receive direct compensation. There would be a kind of SFT or cash option in some of these tasks. And then the idea is that there would be recurring revenue because every project requires annual verification. So there's annual monitoring required. And as more projects are onboarded, there's more tasks. And so the idea is to create this market of value of work for the verification companies. And then, sorry, go ahead.
Yeah, so I'm curious in the future what might be the process for someone to buy an SFT.
So here's a kind of very simplified flow, and the idea is, and in the beginning, you would have a forest protector who verifies that their forest is there, that it's standing. This is overly simplified. There's a two-phase verification process, but for the sake of simplicity, the SFT would be minted, and then they would decide, do they want to sell it or hold it? Let's assume that the forest protector wants this capital injection liquidity, so they sell their SFT on an exchange. At this point, the SFT is either is bought by a user, so the user provides cash capital, receives their SFT. They're now able to either trade it. Again, this is the traditional style investor. They just buy and trade, hold their tokens as their investment thesis dictates. But then you have the environmental investor, and this is where you would have a dashboard. Think of a global UI map of all the hectares of primary tropical forest in the world that some of them would be minted. So you would have the available hectares that have SFTs generated from them. And so now you're able to take that SFT that you purchased on the market and then stake it to the preferred forest plot, that forest hectare. And now with that, you can have this public signal of support, because that hectare forest would have a profile that would say, this is the type of forest, these are the benefits that are coming from this forest, and this is the supporter of that forest protector. You'd have the forest protector and then the supporter of the forest protector. And that supporter of the forest protector, in order to maintain that relationship, that signal of support, they actually have to purchase the annual verification tokens. And then why would they do that? Well, they can either retire those tokens for actual compensation claims or credit, let's say carbon credit offsets, or they can resell them on the market and maintain their connection to that forest, and another AVT buyer could claim those credits. But here basically they have two options. They sell their they sell their AVT. Sorry, this is supposed to say AVT, or they unstake their SFT. Sorry, this is an error in this. Or they buy their AVT, maintain their stake, and with that they continue this relationship to that forest. And then now this is the end of kind of what we have to present. What we're gonna now ask is, this is an ask of feedback from this group. So these are the core assumptions that we've made in order to kind of create this system, this concept, and we'd love for you all to challenge these assumptions, offer ideas. Any feedback that you can have is valuable. We're at the stage now where we've gone to COP30 to meet with indigenous leaders, with funders, investors, and we've done this basically. We've come to them and we said, hey, look, these are our assumptions. What do you think? Critically analyze this concept, and we believe that we're in a good stage now. We're fundraising, we're working with potential developers to start piloting, but I think this is still a very valuable group of people to actually test this concept with. So here are our assumptions. We'd love your feedback, your critical thought, and any ideas or support is welcome.
Yeah, jumping in on real quick on that, if I may, just a lot of people have been working in sort of these areas. There are a lot of unknowns that are still out there. This is another one, an example of us trying to find solutions that can actually be brought to the real world. But obviously, we have to make some assumptions, and there are some leaps of faith, right? Just really quick, and I think that it answers some of the questions. As you may know from my engagement, and also particularly with this group, there's a huge amount of technical development that's been going on that provides what we do believe to be like the real technology basis for enacting a bunch of this stuff. We're getting even better at remote sensing, on the ground sensing, and all that sort of stuff that can, produce data that can actually be really tied to these things. And that's what's, that's becoming a reality, right? But there are market dynamics and stuff that are still open and out there, and we need to be figuring out, right? So that's one of the areas that we're definitely interested in talking to people about, and we're also particularly interested in, talking about like the actual implementation of these markets, blockchain, crypto markets, type of thing. Getting expertise and feedback on that is something that's of great interest to us. As David pointed out, there's been a lot of great engagement, particularly on the supply side of things. There are deep connections to a lot of people who have a lot of very, amazing forest out there that we're feeling very good with connecting to, right? But are, very interested to bang this around and see where the cracks are. See also particularly where other people might have come up with some answers. And are looking for collaboration to further this. So that being said, if we go on to the next one, right, just a final slide there, and then definitely want to jump into conversation. Thanks a lot. There's some information here, a bit more about where to find other information. We've got a couple of websites that have got stuff. In particular, there's a white paper that David has written that has great detail about the underpinnings of all this concept. And so if you have a chance to take a look there and comment back, much appreciated. And with that, thanks a lot, Paige. Thanks a lot, group. Certainly looking forward to chatting and hearing what people have to think, or have to say.
Have to think. No, that's the perfect lapsus. Wonderful. Well, dear audience, you've been given the ability to unmute yourselves now. So if you wouldn't mind unsharing your screen, David, I think it'll be lovely to go back to the gallery of faces. And we're already getting a hand raised from Eduardo. Great to see you. What are you thinking?
Well, first of all, hello to everybody, and thanks for the presentation, Gunthar. Nice to talking to you again. I would like to start first. I would like to give you some remarks because myself, I am also looking into alternative, let's say, financial frameworks, alternative to carbon credit markets, okay? So it's great to see that there are alternatives like this one. And actually, I'm also working in developing one of these different type of models. But when I see the model that you are proposing here, at one particular moment you are talking about environmental investors, okay? And when I see all the components, for me this sounds like another biodiversity credit. I mean, why is this different? It's just another name or another methodology, but in one way or another, what you are positioning in the market is biodiversity credits, okay? So how do you see that? Why do you differentiate against the other 50 methodologies that are there in the market?
So I'll take that in. The one difference, the one fundamental difference is that the biodiversity credit methodologies out there are not tradable. They're not investable assets. It's usually, to me, and this is with all respect to the market, it's a glorified philanthropy, where it's a way in which you can donate to a very specific biodiversity outcome, but you're not then investing in trading and able to receive a return on that.
Well, and then, I take your point, but if you go and you talk to the land banking group or other organizations that they are selling the credits, they claim that you can trade them. Just, I do not believe it's tradable. Okay, so that is why I'm bringing the topic directly on the table. I think that when you get into this, it should not be tradable. But at the same time, you guys are proposing a token, so it's tricky.
And that's where there's
50 tokens in Ecuador, and I buy 50 tokens in a savanna in Africa. Well, they are totally different for me.
And so that's where there's the difference between the SFT, which is tradable, and the AVT, which holds is that package of credits, which includes the biodiversity credit, but it's separate. The SFT is fungible, so it's tradable. It doesn't limit the buyer to one specific forest or one specific area. And that's the difference between the existing biodiversity credit models and the existing token model.
Thanks, Eduardo.
Just jumping in there, Eduardo, totally appreciate and hear where you're coming from, and that's one of the reasons. I mean, it's very specifically wanting to have this conversation here, right? See where things do overlap, right? Where they are the same, and also, try to draw out some of the differences in what this proposal is. So, very much appreciate your comment there. And happy to explore that further, because I think one of the other, I mean, I'm going to say this for us, David. I know there's, lots of things that people are thinking about some of this stuff. And so where are the areas of collaboration, overlap, consolidation, and so on? So, so thanks.
Absolutely. Yeah.
Yeah. Any other thoughts on that, Eduardo? Or does that seem to more or less get an answer to your question so far?
No. It's, well, it's a discussion to be followed. Let's put it that way. I think that, as you mentioned, the DMR, everything about the monitoring, DMRB is going to be also very important. In your slide, you are talking about, you talk about near real-time data related to the satellite information. I would say that the near real-time data is going to come not from the satellite, but more for the underground monitoring properly done, which is going to be critical in these cases. And one last question. So when you create these tokens, how are you going to give value to each one of them? Because again, let's give me a price for 1 square kilometer in the equator, and another one is in a savanna. How do you handle those? I mean, the pricing, who's going to be putting the number there?
This is where it's important to connect back to the biodiversity credit market. And the biodiversity methodologies are actually what price the difference of value between higher and lower biodiversity forests. The SFT itself is one price. It's the AVTs that help allow for that differentiation in price based off of ecosystem services, ecosystem value, biodiversity value, carbon value, etc.
Thanks both for your answer, and Eduardo, thank you for that line of questioning. This is also exactly what we're hoping for.
Yeah.
So Steve, up to you.
Yeah, I just had a quick question. You had mentioned about the flow back and royalties back to the protectors. Where is that cash flow? Where are those funds generated at? How is it getting back? How does it materialize and get back to the actual protectors?
So the idea is, with every trade, if I buy and sell a token, every transaction captures a little fee, transaction fee. And then that flows directly into a protector fund, which is distributed proportionally to all the protector wallets.
So, all right. I guess this royalty or this feedback is not a continuous. It's not because once you sell it, the whatever royalty or it's generated at that time, how do you? It's a one-time fee to the protector, or?
It's a one-time transaction fee on every trade, and so the idea is one SFT will change hands, in numerous times, and every time it changes hands, that transaction fee goes to the protector.
Okay. And here's just another comment. You in the listing of the current ways of financing, you left one. I thought one is a big one. In Costa Rica, for example, there's a lot of green taxes. So tourism is taxed, Gasoline is taxed. There's a bunch of green taxes that the government incorporates, and corporations can actually deduct it from whatever efforts they go into green, in environmental protection and sustainability. They can actually write that off from their tax bill. So again, a really good effort is lobbying effort and trying to change legislation. Again, I know Ecuador's political environment might not be the most mature or the most stable to do so, but in Costa Rica, it's worked for years now, to the point where there's all kinds of green taxes being injected into the system, and the payback is through tax credits and through tax certificates that are exchangeable on secondary markets. So if I have an activity that's generating a lot of green tax benefits, I can tokenize those by issuing a credit, which I can trade on a secondary market.
That's actually a good, I think, idea to incorporate into the AVTs, because the AVTs essentially are these unique, broad assets that can capture any type of ecosystem benefit, and that can also then be that connection to project, to the tax benefit donor, etc.
And that model came not from the environmental side. The model was developed originally from the business investment development side, where Costa Rica came up with CATS, which is Certificados de Créditos Tributarios, which was basically tax certificates which exporters would get. They would get a percentage for everything that they were exporting. They were getting a certificate, a tax credit, which they could apply to their tax bill or trade them on a secondary market as well. So, and they just basically modified that to create a whole series of green taxes in Costa Rica for financing reforestation, national parks, biological corridors, and a bunch of the different green initiatives that are currently in the country.
This is where the project aims to have this kind of contextually adaptable structure, because, for example, in Ecuador, it's that environmental tax benefit is emerging. There's actually legislation that allows for it, but it's too bureaucratic to be possible. In Costa Rica, it might be possible, and we could then adapt the AVT structure within that context, within that jurisdiction, to have that as a feature of buying the AVT.
And here, I don't want to hog up the time here, but just one, and the last comment, the movement currently, and this is where it might be interesting for you guys, it's like with Replanet, we're Agrotech, we just finished doing the whole ground truthing for this first phase of a big project for Replanet, and the initiative is to privatize these credits, these certificates, so not only the government can issue them, so we can have private initiatives to initiate them, which are again fungible in the tax markets and in the business development side of it. So again, the right now the lobbying and the legislative side of it is to change the laws so that these projects like this Replanet project, which is a totally private, non-governmental initiative, will generate fungible tax credits and certificates that corporations and businesses can use for their tax bills.
We'd love to talk more about that. You see how we can mold it to fit within that concept.
And maybe you can talk to us about that ground truthing at a Nature Tech in Action this year.
For sure, I'd love to do it.
Amazing. Well, thanks for your question. And we've got Stephen next. And then after that, we'll have one question in the chat from Girija.
Exciting stuff. I guess two questions I had. Yeah, I understand a lot of these are hypotheses that you're looking to test, but what's giving you conviction that there'll be demand, like where you're sitting now? Obviously, you got to test it, but you're doing this. Like, what's exciting? What signals are you seeing?
Well, this goes back to the list of assumptions that we have, and there's, I think the core assumption is that scarcity is a driving factor for value. The idea that there's a limited amount of forest left in the world, limited amount of primary tropical forest left, and that this is kind of irreplaceable in value, that is important enough in the kind of investor's mind that um, that scarcity is a driving value of a driving factor in value. And then did that answer your question, or your question was?
No, yeah, I think so. I think so. And then my second question, given there's a lot of activity in this space, are there other players that you're inspired by? I was recently, I don't know if you're familiar with an organization called Planetary X. They're also doing biodiversity oriented credit. So just who's exciting, like, fellow travelers out there?
So, in the development of this and in writing the white paper, I researched as many of these similar projects as I could find, and usually the projects were founded upon credits, whether there's carbon or biodiversity. Usually that's what they were, that's the value that they were selling. And so then, and that's where we started as well. And then we pivoted away from that because we realized the biodiversity credit market is fairly weak and it's very relationship based. And so, Planetary X, they have really strong corporate relationships. And so they're able to find buyers. We don't have those corporate relationships. So for us, it's a bit different. And then, so yeah, credits, and then this focus on primary forest is also unique. When looking at land banking, they're primarily on regeneration. And again, that goes back to carbon. Usually it's okay, regenerating a forest, how much carbon is in that? And so then this focus on primary irreplaceable forest was something that we wanted to differentiate on. And then there's a few others. Invest Conservation created this concept for a token that's also on tropical forest, I think even primary forest, hectare-based tropical forest tokens. But the structure that I found problematic with that is centralized minting. So where the organization creates the tokens and then distributes them. And that was the key factor that we found was problematic. Is we thought, no, the forest protector is the one doing the work. They are the ones that should control the supply. And so then, yeah, those are some of the ones.
Thanks, David. And we've got like 3 or 4 questions that have appeared in the chat. So you're going to have to give rapid fire responses almost. No.
All right. So
Girija.
how do you envision?
Yes.
How do you envision avoiding a rarity associated devaluation when the available number of tokens ends up lowering the value of the SFT token? Rarity. What do you mean by rarity associated devaluation?
So I'm curious to see, how do you envision when you reach a certain limit of when you have a limited value of something and you reach a certain limit, and when you go beyond that point, the value ends up dropping, because then it, in a pessimistic sense, like, is it even worth it to continue investing in it? So what is that number that you see, and how do we avoid that drop?
Well, I think from what I'm understanding of your question, there's 2 elements. So the hard cap of 1 billion is meant to match this estimate, this global estimate of primary tropical forest. And so then that hard cap embedded within the project allows for there never to be this idea that there might be more. So that's the top supply. That's the ideal supply, to be honest. If we're tokenizing the protection of 1 billion hectares of primary tropical forest, I think we've done a very good job. That's a good problem to have. The reality is the tokenization will take time. Forest protectors onboarded, it'll be gradual, and so the supply is modeled to actually be a gradual uptake. And if we do reach maximum supply, great, and that will only increase the value because there won't be any more tokens being minted after that.
Would you consider like releasing them in certain amount of like timeframes, or could theoretically 1 billion be open from the start?
If 1 billion were open from the start, that would be an amazing, amazing case. The reality is it will be gradual. Our pilot will be kind of slow uptake, and then I mean, if all of the tokens came online at one point, maybe the initial value would be low, but then the core investment thesis around scarcity would allow for it to gradually go up, and that's the goal, I think.
Thanks.
And then now we have a question from Bonifacius next. Did you want to?
How do you envision the dual token system to potentially be incorporated in existing planned carbon projects? Example, Red Plus. Imagine implementing agencies who are already doing carbon projects would be interested in adding this to them. Yes, so this is exactly the concept behind the AVT, is that it would be able to integrate with existing projects. So if a forest protector is onboarded, but maybe they've already sold their credits, so they wouldn't be able to sell carbon within their AVT, but maybe they have existing credits that are unsold, so they could package them into the AVT, and hopefully this would add a new marketplace, a new selling avenue for these credits to be marketed. And so absolutely, existing implementing agencies, the idea is to work with them, integrate with them, and create AVTs that are fully interoperable with the existing credit systems, because we're not trying to recreate them. They exist already. We just want to integrate with them. Next question. What happens if the ROI on the tokens takes a while to mature, as carbon projects normally spend multiple years and investors hold on to tokens and don't trade them, so the percentage of sale is not being channeled to the forest stewards on a regular basis? So the idea is that the forest protectors would receive revenue in different stages. So first stage is the sale of their initial SFT. That can represent X number of value, X value based off of the price. But then the idea is, as you have these two groups of investors, one that might hold the SFT, one that might just buy and sell based off of price and speculation. So as they buy and sell, there's kind of perpetual daily royalty payments. So this is where there's this continued revenue, continued value going back to the forest protector. And then when you think about carbon projects and investors holding on to those tokens, that's referring to AVTs. But then what we've seen is that there's buyers of credits that buy them to retire them directly, and there's buyers of credits that buy them to broker to resell them. The idea is, if you're an SFT holder that you've staked your SFT onto that specific forest, you want to maintain that relationship. So you're obligated to buy that forest's AVT. You can do either. You can retire them or resell them. But the forest protector has received that purchase upfront from that stage. And so we're trying to create this incentive for the buyers of these credits to actually enter into the credit market early, and the value to go to the forest protector early. And then if the resale happens, there's still that royalty that goes back to the forest protector. So the idea is that we're not distancing the forest protector from the potential exponential, or the speculative value, let's say, of those credits as they're resold on the secondary market. Next question, interested to learn what your IPLC consultation process was to establish this SFT-AVT token approach. Further, what insights your market demand assessment surfaced to establish this initiative, and who your core target market is. So we actually have a very strong indigenous leader on our advisory team. He's very well connected across many indigenous groups within Ecuador and globally. His name is Leo Cerda, and he's the one that from the start challenged all the concepts and gave us advice, strategies for how to make sure that this works within the context of indigenous communities. And then we went to COP30 in Belém, and that was arguably, the strongest congregation of indigenous communities in the world. And we met with so many people. And again, the process was challenge this concept. What do you think? Does this work? What's wrong with it? And that was our kind of very strong consultation process in a sense, and it's ongoing, really. Especially now we're working on a way to create direct finance mechanisms, not only for our project, but for other large funds that are, I would say, more top down. Ours is bottom up, but ultimately the process is similar in terms of making sure that these models fit within the value systems and requirements of IPLCs. Let's see. Our core target market, again, money-driven investors, environmentally driven impact investors, both supply side forest protectors, service side DMRV providers. Have you decided on a chain? If so, why? No, we have not. We're assessing potential chains. We'd love to discuss this with anyone who knows. There are a lot of considerations, and there's so many people trying to pull us in many different directions. So not yet. Assumptions focus on market, technology, legal. Any assumptions? Any social, institutional assumptions that you see netted? So social assumptions, number one is that forest protectors want this. That's really the number one thing, and that assumption is the one that we landed to COP30 with. That was the main assumption that we wanted to challenge. Is this something that people actually that need and want and are interested in? And the overwhelming response that we've got from communities around the world, from forest protectors around the world, was yes, please, and do it quick. And then Quetzala, yes. I haven't met them personally. A lot of people have been referring me to them. From what I've researched, their model, it is a good model. I've seen it in the past. It's not the first. But again, it depends on the credits, the carbon credits. So that's somewhere that there's potential interoperability, but it's not a structural similarity.
All right. Thank you so much, David, for that rapid fire. For everyone for being here today. Those were excellent questions, and really great to get so nerdy and get to challenge a nascent concept like that. You'll tell us at the end of the year where you're at. And yeah, clap, clap, clap. Thank you so much for the presentation. And I hope you have a beautiful rest of the day, afternoon, evening, wherever you are, and to see you at the next webinar we host together.
Thank you all so much. Really appreciate this. And thank you, Paige and NTC, obviously, for this forum. Always valuable again, right? And look forward to chatting further.
Yes, please reach out if you have any critiques, thoughts, would like to collaborate. We're really looking to build our team at BioFia. The idea is that this is one of many projects that, that we start. So, but anyway, the idea is alliance of members like yourself. So if you're interested in working on something like this, would love for your collaboration.
And if anybody will be in Lima next week for the technology conference, ping me. I'd love to see you.
All right. Ciao, everyone.
Cool.
Closing it up.
Bye.